I'd like to, talk about two other things. One that's not talked about openly, but let's face it, most of the growth industries in China have grown up in the gray zone, meaning that regulation hasn't existed. And how do you feel about managers investing in new sectors that's not clear whether it's allowed or not allowed? And so actually CreditEase grew up in that environment. Mm-hmm. So now that you're investing in other managers and other companies, how do you view that?
Sure. So I guess we have our own framework in terms of selecting managers. Our goal is to obviously generate good return for our investors through our fund-of-fund vehicles. And then to the extent where we can be of help when it comes to Chinese angle, we'll try to be of help to our partners outside of China, connecting dots in China, for instance. When they're curious about Chinese fintech space, they talk to our managers in Beijing, learning about the marketplace. We are investing in close to 100 funds in China, renminbi market, and so many GPs come and ask us, can we help us connect to these ABC managers? And so I think we've had a very fast learning curve in terms of us being one of the VC-backed firm, now one of the largest allocator of Chinese private wealth market money into global private equity industry. And so that's how we see it.
And John, so how do you look at these new industries that emerge, and yet there's no policy that says it's allowed or not allowed?
We, and I've heard it said a couple times over the past day or so, and that's in some of these markets, law doesn't matter always. Even if you have legal structure in place, there's still those occurrences where the state just decides to take the company. So how do you avoid that, I think, is the better question. And I think for us, we find managers that have enough people on the ground that have connectivity into the government, have connectivity into those sectors or those industries of focus so that they know better, a little bit better. You can't do it perfectly, but you can at least get better insights than someone that helicopters in.
Alan?
Yeah, I think it's not so different globally. I think it may present a little bit more downside in China potentially, but Airbnb was operating in an area where it's not clear whether they were legal or not for a while, especially in places like New York. I think I think it really depends on the manager who's on the ground who really understands how to navigate. One of our managers, for example, is in BGI. BGI, for example, on the genomics side, I think it's the largest or was the largest customer of Illumina for these ultra expensive $500,000 genomics sequencing machines in the world. And these are not areas that how things will shake out over time. And I think it depends a lot on the manager's knowledge of these industries, but that's also partly where potential opportunities are.
That's great. Janet, and how do you?
Yeah, no, I mean, I really don't have too much to add, but just one additional comment. I mean, particularly, I think the risk is, or the opportunity, I guess, is on the consumer side, there's also the law of the power scale, right?
Absolutely.
If enough of your constituents, I mean, I think the Chinese government is the same as every government, around the world. I absolutely agree with you. It's not like any other places in the sense that if enough people are using it, it's really tough to shut it down. So I think there is that, there's the power of, there's a power law.
Well, actually, the Chinese government has proven just to take the opposite approach. They've been extremely hands-off on regulation, which is now why they really have the first internet banks, why Alipay became so powerful. You're exactly right. They took the approach of letting these industries grow up and then coming back and regulating later, but with lots of time to actually adapt. So they've actually taken a very hands-off approach, which shocks most people. They actually haven't shut down an industry in the last 10 years that I've been there, or 11 years. I haven't seen them shut down an industry. They've come back and regulated industries, but they haven't shut it down, which I think is extremely promising for the future. So I think, how do you compare the Chinese market to other emerging markets? And how do you think about maybe India versus China or versus Brazil? And I think we haven't mentioned, but ASEAN, has 600 million people. Indonesia is a very fast-growing market. I mean, how do you compare and think about China versus these other opportunities? You want to start, Janet?
Well, in a way, and perhaps I'm biased because I was born and raised in China, communist China. In a way, I feel so I have a natural more comfort with China, but I would attribute it that the controlled central government could work both ways. And in particular turbulent times, like the GFC, the global financial crisis that we've seen, as well as where we see right now in the world, the increasing political risk everywhere else, I think it's, to me personally, I find it more comforting to at least to have a steady hand in the world's second largest economy to make sure that it's not going off the rail.
Yeah. Alan?
Yeah, so I have a complex problem because I have multiple asset classes and there are multiple countries to go into on the emerging market side. So to fully cover that, I look at several factors. The easiest one when you compare China, India, Brazil, Russia, and ASEAN, I look at the currency exposure. So for my portfolios, I have primarily Chinese and Indian public equities, some exposure to Russian and Brazilian equities, but effectively no designed exposure for private exposure to Brazil and Russia so far. I think if you look at these countries, you also look at the size of the domestic markets. Looked at Asian buyouts that did very well for middle market a while ago for Southeast Asia generally. Yeah. But generally, it's pretty hard to find a firm that can, or entrepreneurs or venture capitalists that can cover most of the regions. So I look for large domestic markets, exactly like Janet mentioned. So China and India ended up being two areas that we've spent a lot of time on. And then I look at the regulations and what works and what may not. So e-payments actually more exposure to that in India, exactly because of what Karthik described earlier. When we were counting votes here, India was counting notes and taking the money out of the circulation. So it was, and they have an entirely great system of you can pay somebody in a rural village with just a personal ID. And that's just implemented in a superb way that's quite different, that makes it stand out. So multi-asset class approach, but look for large domestic markets.
And John, how do you view it?
You know, really, two things. One, it has to come back to dollars for us, so I would echo the FX point. Second is really we've got to pick the right manager, and you know, some things that seem crazy. You know, like we've done as an example, a VC manager who invests into Eastern Europe, Africa, Middle East, Southeast Asia. They've done basically over 250 deals, but over that track record have lost only 15% of those deals. So lost on any 15% of those deals. So that, even though they're going into some interesting markets, different markets, you have the currency effect, et cetera, if they can do that and still generate solid returns, we will continue to do that all day.
And Sang-Hoo, how are you thinking about your allocation across those markets?
Yeah, so we are now overweight on more developed markets, US, Europe, and other parts in Asia. Within emerging markets, we started looking into other parts in Asia, including Southeast Asia, India. We've had some experience from previous organizations. A great market, but for instance, India used to be 43 rupees on a dollar 10 years ago. Now it's about 68, 69. So from currency standpoint, you're losing 30, 40%. And so those were key factors for us to consider when it comes to investing in new emerging markets. Similarly, Southeast Asia, very attractive market in terms of macro standpoint, but when it comes to volatilities that hit the market, that can actually impact your dollar investments. And so those are some of the key factors we're also looking into.
Great, well, thank you. And so we'd like to take some questions from the audience now. Any questions?
With regard to RMB funds, how do you view as non-Chinese investors the rise of the money in RMB, and how does that affect your investments in China?
Sure, thanks, Russ. I'll take that.
Thank you, Alan.
Well, RMB funds have been an interesting phenomenon. It started as a pretty small-scale experiment, and I remember some of the fund managers debating and then talking to LPs. So you have multiple angles of when you invest in the same manager, they have an entirely different set of LPs with a parallel set of funds that are invested into sometimes the same, but sometimes different companies. I think some managers handle it pretty well, but overall, it's more capital going into a market that used to have less capital. So more capital competing for deals, and potentially diluting down some of the deals, and then shutting out some of the ones that may not be eligible if it's not the right sort of structure investing into those companies. But it's a very natural development of the market. If we look at, I guess if we look back at the US, when the US was first formed, some of the capital that were funding companies here would have been British. And over time, we don't see a lot of British capital funding venture deals or companies here. And that's a very natural development.
I would say, Russ, I wouldn't penalize our US dollar GPs for investing in RMB funds, because as part of their job, they need to understand the ecosystem, and I'm sure there are benefits to the platform and the infrastructure. That being said, I've had many China GPs who run both RMB and US dollar funds tell me that the RMB LPs tend to be much shorter term in terms of mindset. They much less willing to lose money, capital, even if it's on paper, in the short term. And then things go in cycles, right? In US, when allocators find China is out of favor, the RMB LPs tend to have that power shift. And then when things change the other way, the long-term investing or the US dollar LPs, tend to, I kind of look at it as a cost of doing business in China.
Just quickly on this one, so we are also a large allocator in renminbi Chinese market. When you look at maybe 5-10 years ago, about 2010, renminbi took over US dollars in terms of total invested capital in China. And one of the reasons is exactly a lot of Chinese RMB funds used to have much shorter duration, so 3+3, 6 years, 7 years. A lot of them are relying on pre-IPO deals. And so IPO market was very important for their exits. When CSRC stopped the sort of IPO approvals for about close to 2 years, that trend has kind of all shrunk a lot. And so US dollar has come back a lot, significantly. So I think the way how we see now is a time where a lot of sort of previous RMB managers that were not proven are sort of couldn't raise money anymore without strong value creation capabilities, deal sourcing abilities, etc. A number of US dollar managers are raising RMB funds because some sectors don't allow dollars to be invested in. So I think it's a good channel for them to access some of the hot deal and good deals through the RMB channel, and then still get connected to the industry.